Applied Digital, ticker APLD, pivoted from Bitcoin mining to building AI superfactories, and the stock is trading near its 52-week highs of $18.68. Over the last year, it's up more than 200%, and analysts now see upside as high as $30. So the real question is Applied Digital the backbone of the AI boom, or just another speculative hype story that's waiting to collapse? Well, here's what we know. Applied Digital has already locked in $11 billion worth of long-term lease contracts with CoreWeave, one of the hottest players right now in AI infrastructure. They're building mega data centers at lightning speed with plans for a $3 billion AI campus in North Dakota that could power workloads for the next generation of AI models. But there's a problem. The company still lost $233 million last year, and they need billions in financing just to keep building. And with its 60-month beta of 6.6, this stock swings harder than almost anything else in the market. In this video, I'm going to break down Applied Digital's pivot from crypto to AI, its massive growth catalysts, and of course the risks that could completely destroy shareholder value, even if execution slips just a little. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. That's a good thing because I don't push products. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. So with all that out of the way, is Applied Digital building the future of AI infrastructure, or is it just another boom and bust story? Well, let's find out. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Applied Digital was founded originally in 2020 under the name Applied Blockchain. Headquartered in Dallas, Texas, its primary business was mining Bitcoin. As time went on, the company decided that there were bigger projects that they could tackle. In 2022, the company did a strategic rebranding, renamed itself Applied Digital, and kept its ticker symbol APLD. Applied Digital was now going to start building advanced infrastructure solutions for artificial intelligence, as well as constructing large-scale data centers. And that, folks, is a huge pivot. But surely they had some experience hosting all those Bitcoin miners, right? In other words, Applied Digital went from chasing crypto hype to laying the foundation for AI. As part of their pivot, Applied Digital also had a cloud business, which they ultimately decided to sell so they could focus entirely on data centers. And that move tells you a lot. They're doubling down on what they believe will truly define their future. So if you made it this far, I'm sure you're wondering what's happening with Applied Digital stock. Well, let's dive into what the numbers are saying. And by the way, if you want to follow along, just scan this QR code. So the last time I covered Applied Digital, the stock was trading around $16. That was just a month ago. If you bought around that time, give yourself a pat on the back because Applied Digital last closed at $18.68. So we're seeing the stock right now around its 52-week highs. So if you haven't already, like and subscribe to the channel so you never miss any of my future deep dives. So yeah, investors, they can't get enough of Applied Digital. Over the last 52 weeks, the stock has traded between $3.31 and $18.71. So yes, it's volatile. If you look at their 60-month beta, it's 6.64, way over 1. And that means Applied Digital is 6.64 times more volatile than the S&P 500. And that's the kind of stock that can either double or crash in a heartbeat. In terms of performance, Applied Digital stock is up on all date metrics. From 5 days to 10 years, it's all green. Actually, can you imagine the gain you would have had if you bought this stock like 5 or 10 years ago? I mean, look at these returns, like 28,000%. That's not life-changing wealth. That's generational. But remember, past returns don't guarantee future performance. The real question is whether this pivot to AI can keep the momentum alive. All right, so those giant gains are great and all, but how did it get there? What's supporting the stock? Well, for that, we need to take a look at their financials. In the fourth quarter this year, the company reported revenue of $38 million, which is well below the $42.86 million that analysts were expecting, but still 41% more year over year. And net losses? Well, it came down 25% to $26.6 million. So we've got revenue growth and net losses are coming down as well. It's progress, but it's not yet profitability. For the entire fiscal year, revenue rose 6% to $144.2 million, but this includes the sale of Applied Digital's cloud business segment. Total net loss for the entire year came in at $233.7 million. So yeah, Applied Digital closes its fiscal year again in the red, but still has positive revenue growth, which I think investors see as a sign of hope. From a fundamental standpoint, the numbers do look resilient, but growth without profits only goes so far. Eventually, the stock market is going to demand earnings, at least positive ones. All right, so what can propel Applied Digital stock higher? Well, this is where the story starts to get interesting, right? Talked about CoreWeave earlier. Well, the CoreWeave relationship that I mentioned in the last video is now turning into a long-dated revenue machine. Applied Digital originally secured two 15-year leases at its Polaris Forge 1 in Ellendale for around $7 billion for about 250 megawatts in critical IT. And all of this feeds servers and GPUs needed for AI computing. But then just a few weeks ago, CoreWeave ordered an additional 150 megawatts at the same site. And all of this lifts Applied Digital's anticipated contracted lease revenue to around $11 billion. The expansion also revalidates speculation that neocloud AI tenants with higher demand for computing needs, such as CoreWeave, are willing to sign lengthy and very lucrative deals with companies like Applied Digital, who can deliver power and racks at next-level speed. And that's just the beginning. Applied Digital's management has mapped the next leg of their Polaris Forge 2 campaign. This is a plan for a new $3 billion AI factory near Harwood, North Dakota, capable of around 280 megawatts in critical IT capacity. They're scheduled to break ground this month, which means it'll be running the initial capacity sometime in 2026 and should be completely built by early 2027. The company says that they've secured critical choke points in the form of land and power interconnects, all of which will help them scale AI-grade data centers. If Applied Digital is to be able to stay on their timeline, they're going to have a fresh runway of leasable megawatts on the market, which will serve the ever-growing demand for AI workloads. In other words, if they execute, they could be sitting on one of the biggest growth tailwinds they've ever had. But let's not get it carried away, right? Because just like we've covered on my Discord channel, every growth story is going to have some headwinds. These mega campuses only work when money is cheap. With billions in build-out ahead, Applied Digital still needs to secure project financing on favorable terms. And with a high beta, this stock can slip even with good news. So it's a reminder to investors that equity and debt markets can turn around right when you're not looking. Despite their $11 billion in contracted backlog, some analysts have leaned towards the bearish side, which has made some investors question Applied Digital's execution timeline, path to profit, and reliance on key tenants. And this skepticism matters because every hiccup can magnify volatility. Bottom line, the market won't give unlimited benefit of doubt, right? Delivery beats narrative, and consistency is what reduces volatility. So is Applied Digital stock a buy? Well, Wall Street seems to think so. A consensus among 10 analysts rate Applied Digital a strong buy. There's a high target price of $30, which is higher than in my last video. As long as they can secure financing on good terms and execute everything on schedule, well, Many will expect more room for growth and new record-setting highs as these megawatts turn into revenue for Applied Digital. And the sentiment has followed. The stock is trading around its 52-week high on the execution of the Polaris Forge and the CoreWeave ramp. While the charts aren't the moneymakers themselves, they do give investors hope. This is a high-risk play for players who seek high rewards and fast. For me, I am waiting on the sidelines until I know that they can turn a profit. And yes, that means I'm willing to miss out a little on the early upside because I know that once it takes off, I'm going to be right there with them. Before I go, I do have one last question for you. Do you believe in what Applied Digital is doing and their direction? Let me know in the comments below. And while you're there, don't forget to like and subscribe. It helps others find this video. It supports the channel. And of course, you won't miss any of my future deep dives. Well, folks, that's it for me today. Thank you so much for watching, and I'll see you next time.